In 2009, New York Attorney General Andrew Cuomo concluded that the databases used by insurance companies to calculate the reasonable and customary fees that they would pay out of network treatment were part of a scheme to defraud consumers by systematically low-balling the fees. The story of delay, deny, defend by property casualty companies is part of the failure of insurance as a whole. The ratio between the figures of what's collected in premium dollars and what's paid out in claims is called a pure loss ratio. The property casualty industry as a whole in 2007 earned $451 billion in premiums and paid out $251 billion in claims for a loss ratio of 56. In other words, the insurance industry paid out to policyholders and tort victims 56 cents of every dollar the policyholder paid in. The industry's pure loss ratio has been improving over time, if improving is measured from the company's perspective. The loss ratio in 1987 was 67, and in 1997 was 61. Which means that it has paid out a nickel less for every premium dollar compared to 10 years ago and a dime less compared to 20 years ago. Additionally, this next section is really good. Paying out claims is not costless. Adjusters' salaries have to be paid, computers have to be bought, and offices have to be rented. All of these costs are considered LAE, loss adjustment expenses, or expenses that are directly related to paying claims. So what this is saying is the insurance companies obviously have things figured out from a pure loss ratio. But what they've also figured out is their cost, which is their adjusters, their fees, their staff, the admin, their overhead. Just like a contracting company, you have overhead that you have to use to produce the work. They have lowered that over the last 20 years or probably more by continuing to push that labor burden off of the carrier and put it more onto the contractors. Whether that be you are documenting most of the claim yourself for them to meet their guidelines, or they're using a third party or another pet contractor in your community to come out and do the work for them. So they are not paying claims in whole. They're using delay, deny, defend, as well as they are using other tactics to cut down their LAE, their own expenses, to only increase their profits. So for that, I say pay attention, look at what's going on, bowling frogs. I'm going to continue to read a little bit more here. A combined ratio of less than 100 is good for the company. The company pulls policyholders' premiums to pay losses and expenses, but it does not simply hold the money until it needs to pay it out. It invests the money in the meantime, which is why insurance companies have been described as, and I quote, investment companies that raise the money for their investments by selling insurance, end quotes. The time lag between taking in premiums and paying out claims, called the float, and the income earned at that time is a major source of profit. In 2007, industry investment profits totaled $58 billion. $58 billion were made off of just the investment of the float. Okay? As Warren Buffett, who owns Berkshire Hathaway, he owns Geico, and other insurance companies have said, float is the great thing about the insurance business because it is, quote, money we hold that is not ours, but what we get to invest, end quotes. It goes on to say, in Charlie Munger, Buffett's longtime partner, and Warren Buffett were called to say they find this very enjoyable and beneficial. I'll come back to that in just a moment. I want to read one more piece here, and I really won't read this verbatim. But I will tell you that every single state in this country, every single state has the National Association of Insurance Commissioners, NAIC. Those guys are on the side of the public. They're not on the side of the contractor, but you get the benefit of them being there. They are a branch of government that puts together the insurance commissioners for every state. They created a legally enforceable standards. We have standards in our industry, the ICRC. They state what those are, and they are enforceable, okay? The NAIC has created legally enforceable standards in its model Unfair Claims Settlement Practices Act. Okay, you can find this for your state. I would recommend you find it, print it, post it in your office. Everybody in your company gets to learn it. What this is this is holding the carriers accountable. Doesn't mean they are being held accountable. It just means that there is action in place to do so. The most basic rule is that in adjusting a claim, the company must not put its own interest above the interest of its policyholder. When a policyholder files a claim, he or she is invoking the promise of the insurance company to accept the risk and to provide security in the event of loss. That promise means that the company will not try to increase its own profit at the expense of the policyholder or to take advantage of the insured precisely at the moment when he or she is the most vulnerable. It explicitly prohibits companies from making lowball settlements offers that force policyholders and accident victims to sue to recover the amounts that are entitled to them. In cases of uncertainty, when things aren't specifically clear, the standard states, in the case of uncertainty, all doubts are resolved in favor of the policyholder and against the company, which wrote the policy and has the ability to draft it in a way that removes doubt. It means they could have removed doubt, but they didn't. Good faith and fair dealing is their expectation. It is the very essence of the insurer and insured relationship. My friends, this is a book, Delay Did I Defend. This is only in the first 8 pages. I recommend you get this book, you dive into it, you make notes, you use a highlighter, you fill it. Conversations that you have with the insured in ways that you are trying to advise them or to represent them of what their rights are, because they don't know, they don't have this book. You can buy 50 copies of this and give them to every customer if you want to. It won't ensure that they'll read it. My entire premise of this video is to share with you that you need to recognize that this entire chess match is being played and it's armed against the insured, and they have now figured out that they can go to the contractor, yourself, my clients, who I'm reading this for today. I have a client dealing with a pretty big claim with some of the most unreasonable recommendations or suggestions. Remember, that's what they are. They're recommendations, suggestions. You don't have to listen to them. Too many people in our industry take this personally and they feel like they have to fight these parties. You don't have to. Their rules, their standards are already laid out clearly for them. All you have to do is shine light on it.